Hi guys, 20th of July 2023, Thursday, MAO with Kel once again. Now, stock market is surging. But the thing is this, the US economy, the US economic data is very gloomy, and this is not going to be a joking matter. And in fact itself, to me, it's just a matter of time. 2 months to 3 months at best, we probably going to see a recession. I'm going to tell you this again. I know that I've been saying this for many times, but this one is getting a bit scary, and the dark cloud is actually basically above the Wall Street. What do you think about that? Let me know in your comment box. All right, let's go. Okay, so disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, how to calculate inflation? Now, recently this caught my attention. In Singapore, it's not like say in MBS or in Raffles Place, but in Parkway Parade, a heartland area, 2 nasi padang, right, cost $39.70. My goodness, I mean, this is really exorbitant. I mean, I frequent that particular area, but to spend $39.70 for 2 plates of nasi padang is really expensive. But of course, you look at it again, practically this guy is having meat, and one veg. Meat considered as meat, then one veg. So basically, but it still doesn't cost that much, right? So the bill came out to be $39.70, and there's no extra charges involved. Beef itself, one piece, beef and a vegetable, $8.20, then added on some beef, $11. Oh, that's expensive. So a lot of people ask this question, how do we count inflation? Let me share with you a very simple analogy here. Say last year, right? Last year, when the inflation in US is like 9.1%. So $100 and an inflation of 9% will cost you about this is about 9. So that is about $9, okay? So after 1 year adjusted value of 9.1%, that will give you 109 in terms of the cost, okay? Then the next year is all right, because it went up by 3%, right, as of now, 3.1%, you mustn't forget that this 0.3, all right, need to be included for the 109. So that means that from 109 multiplied by 0.03, you get the adjusted of 3.27. Hence, therefore, 109 last year plus now 3.27 this year, you get 112.27. So actually the price went up by 12%. It's not like from 9% you get lesser than that. This is something that people misunderstand. And that's the reason why the cost is expensive. That's why our price is all going up. And that's the reason why if this is to continue, this is going to be a big issue, right? Don't you think so? And that's why I'm very worried for this. And that's the reason why I've been telling you this. Be careful on the 25th of July. I believe that there could be a potential big movement coming up. Now, today's already 20th, right? So just a couple of more days, we'll see 25th of July. It should be Tuesday. All right, but again, it could be Tuesday, it could be Wednesday. But the thing is this, I've been asking my friends around me just to take some position off the long position, all right? Especially the NASDAQ right now. I just kind of feel that with what happened in Tesla, you should take some profit, yeah? So the thing is this, let's discuss what happened last night. The Dow Jones continued to go higher, but the NASDAQ has pulled back by 15 points, and S&P, because of the Dow, went up by 10. Interesting. Now, the one that everybody talking about is Tesla, right? Tesla is at 195 now. Remember, Tesla was above 200, and I was telling people this, take profit from there. And of course, some people saying, telling me that I'm being too doom and gloom, or I'm just basically just a doomsayer. But I tell them, look, the thing is this, we must understand that cost for Tesla is actually surging. And if cost of Tesla is surging and their price is coming down, then definitely the earnings will be affected. This is something that we can see. And of course, the post-market earnings result came out and down by another $1.30, down by 0.67% up in the pre-market right now. So you can see that share of Netflix down by 8% after the streaming giant posted second quarter earnings. They posted 8.19 billion in revenue, which is about a bit short of the 8.3 anticipated by the analysts. And Tesla tumbled 4% in the extended hours, right? I think this one have recovered a bit. All right, because the Elon Musk and other executives said that the vehicle production would slow down in the third quarter due to the shutdown of factory improvement. So again, this is what we've been talking about, right? So of course, the other side of it is that all the Dow components now are doing okay, better than expected, and that's caused the Dow to go higher. But again, I repeat, I kind of believe that now we are really near the top of the peak, in the peak area. So traders need to be very careful, and I got my reason for that. So we can see right now, right, that what happened when the UK pension fund blew up last year in October. And then after that, we have seen regional banks blow up itself, but the things that the stock market continue to go higher. That was the reason, because of Federal Reserve pumping money again. We saw that, right? And that's the thing, there's some dark pool going on. There are money coming in, and that is why shadow money come in to push the market. But I say again, the push up itself, right, is very draggy, and this actually may be a problem. The other thing is that because the high yield market is still vulnerable to a recession, but still at the moment now, the higher option adjusted average spread is still at the low end. So we're still all right. As long as we don't see this sudden surge here, like what you saw, right? Whenever there's a sudden surge, you can see that that is where the big R comes in. So now we're still all right. But again, if the inflation's going to come back in again and Federal Reserve has no chance to continue raising interest rate, then that will be a problem. But of course, you will say, but Kel, the CPI data likely will see 2% because what is happening right now from 9.1 drop all the way to 3.0, it should be going on to 2. Like I say again, guys, we can lie about it. There's something we cannot, because as example, shelter price, food prices, they are going to stay up. And in fact, the later part of the year, we all know that energy prices will be going up. So even though the national gasoline price is actually now much lower than $5 back then, but you can see it's holding at $3.50. So pardon me to say this, but I believe that it will hit the $4 very soon again. Now, what is the reason? Because of Russia, because of OPEC Plus, because of the consumption. Right, in the summer period itself, right, the consumption is much lesser. But the second half of the year, usually by the October-November period, this consumption will increase and then the demand will increase. Hence, therefore, I believe this will go up. And probably that's the reason why you can see Warren Buffett have been buying so many OXY. Don't you think so? All right. So now the thing is that we're concerned right now is a slew of economic figures. Let's go into that. Now the bank credit, all commercial banks is really coming down, and this is no joking matter. And you can see that every time when it goes down below the 0% mark itself, there will be the recession coming in. An interesting note is how usually when these are coming down, recession comes first. So the thing is that we are now at this near the zero level and there's no recession. Come on, man, something must be wrong somewhere, right? And of course, right now, the Fed fund rate, yes, indeed, people are arguing that maybe you are near the peak, and so a pivot is going to happen soon. So if it's a pivot, then what will naturally happen? Now, a lot of people say that that means the stock market will go higher. But if you look carefully, guys, in the past history, whenever the Fed fund pivots, meaning if they come off, you see that whenever they come off, the stock market actually sells. You can see that happening again. It happened again. So actually means that the reason why the Federal Reserve will actually pivot is because the economy has gotten into trouble. Hence, therefore, they have to pivot. So of course, you say now, well, Federal Reserve is still going to hang on into it, and there could be 2 more interest rate hike, so there'll be no pivot. So again, if there's no more pivot, then definitely there'll be more rate hike. If there'll be more rate hike itself, right, it's just a matter of time whether the economy can take it, and the numbers are showing it really can't. So you can see right now, right, the US bankruptcy turning up, although it's still low compared to the past in 07 and this 0 0 to 01, but it's actually moving up and it's moving above the average, and this is something to take note of. And you look at it right now, this is from the court filing, yeah, but the one that falling up itself is surging. This is from those companies at 15 million in liabilities. Look at it, we are back to the 2000 level, and in fact itself, the last time we saw this was back in the 09. So with so many companies now filing bankruptcy, how can you tell me that the economy is doing well? Somewhere it doesn't make sense at all. And of course, the main reason is that the credit is getting harder to get for the small business. We all know that the banks have suffered, and obviously it's all right, the bank doesn't want any more money to be coming out, right? So in order to do that itself, they fear for the worst. They start to reduce their loans credit to the smaller business, because when come of any economic downturn, the small business will get hit first. So from the numbers, you can see very clearly that it is actually at the high level right now. So that is resonate why we have this upside in bankruptcy. So now this is where it gets very scary, guys. Take a look. This one is the job opening versus the Wilshire 5000. Now this is going to be very incredible. Watch this, guys. It's going to be really mind-blowing. Okay, so first of all, the Wilshire 5000 went up back then in year 2020, right? But you take notice and look carefully itself, that was where the job opening was already coming down. And after that, itself, when the pandemic happened, obviously job opening slammed, and of course the Wilshire 5000 pullback. So now what you're saying, well, you see the Wilshire 5000 is moving up again, but you can see the job opening is coming down. So is it a prelude of what may be happening soon? And because we have seen it before, when the thing is this, when the job opening really comes off, right, you cannot deny this, both the Wilshire 5000 and the entire stock market will come off. And this is why we are getting worried, because this is something very clear. And of course, you look at it right now, this is the job opening versus the 4-week average of the initial claim. You can see that we have this very far discrepancy here as well. And again, when this happened, you can see right here, where the job openings is coming down, you can see right here. Okay, and the initial claims goes up. you have recession. Okay, so that's the same thing happen again. So why not this happen? And that's the reason why we feel that over the next 3 months it will be a bit of tough time for traders and investors. But of course, with the stock market going up right now, it's kind of difficult to prove this point, but it doesn't matter. Let me show you now more information. This is a consumer price index for the urban consumer versus the US regular or formation gas price. Now you can see that both of them are coming down. And of course, the last time we see this, we can see that what happened? The recession is there. It happened again, recession is there. So what do you think? Of course, it's going to happen again. So all these numbers are telling you that we are heading for recession. It's just that if the US market or US government tried to change the terminology of recession, we can understand that, but the people can feel it. And of course, that's not the end yet. Now look at the consumer price index for the consumer in the US city average. You can see that every time when the number pull back significantly, you have recession. Can you see that? This is almost like a jackpot thingy. Almost every time you see an incredible pullback, you will see recession. So this is very clear that we are heading for that. So Janet Yellen says no. Jerome Powell didn't say no, but he's just saying that there's pain coming in, but still it's still within the acceptance and things are going fine. So of course, these cheerleaders will continue to say that. But again, historical pattern from 1950 to now is 83 years history won't be lying to you, all right? And of course, you can see right now the retail sales is also showing the same phenomenon. So when the initial claim goes up, right, definitely people will spend lesser. Hence, therefore, you can see that the retail trade is coming down. Is when below the zero mark, that means that people are actually tightening their belt and they know that things is happening. And this is happening again in 08, it happened again in year 2, 2001, and both incidents, we can see that it created a recession. So I can tell you this, guys, it's inevitable, imminent to have a recession. It's just that again and again, I know that by saying this is where everyone is calling for buy, I'm going to be the odd one out. But the thing is this, 3 months down the road, when things really happen, then at least you are already pre-warned and you can actually do something with it. And don't forget, there's so much money in the market right now. I feel that after this technical recession comes in, who knows, it may last for 3 months only. And then they will open a floodgate of money coming in, easy money coming in and hot money coming in from the CTAs or whatnot. And then the market is low enough, it's cheap enough, that's the time to buy. Don't you think so? So why not take this advantage of this right now? Take a position off on the market. You can consider shorting the market. If not, just wait for a while, let the price come down a bit and then buy from the bottom. All right, so this is industrial production, and you can see very clearly it's already coming down below the negative mark. And again and again and again, historical pattern have proven that when it goes below the negative mark, 100% of the time, we will see a recession. And at the same time itself, when that happens, the initial claims will be going up. So guys, is it moving up? Yes. Is it coming down? Yes. So what do you think? It will happen. The recession will happen from now till October. It's just this period of time. Traders, you just need to be very, very careful. Of course, as usual, when things happen, it's always when turning point happen, when everybody is complacent and there's no way that anybody will think that there will be a recession or sell off, things really happen. All right, guys. So I hope you enjoyed this video. This is Cal signing off. Take care and have a great time ahead. Bye-bye.